Hi everybody, my name's Lucy Birchall and today we'll be doing a webinar on overcoming the common payroll challenges. Managing the payroll function of a business can be very time consuming and at times it is frustrating for owners and management teams. The rules surrounding payroll are ever changing, especially with the additional burden of workplace pension requirements and the more recent furlough scheme. So during this presentation today, we'll be looking at the upcoming changes to the national minimum wage and living wage, the complexities of furlough, the upcoming IR35 regulations, calculating redundancy pay, auto-enrolment and re-auto-enrolment, and the benefits of outsourcing your payroll functions. Here at Rotherham Taylor, we support a wide range of businesses with their payroll. So if you do have any questions after this webinar, please do not hesitate to get in touch with us. So first up is the national minimum wage. So these generally increase every April, and the new rates from 6th of April 2021 are going to be as follows. So we've got the national living wage for those aged over 22 at £8.91 per hour. The 21 to 22 year old bracket at £8.36 per hour, the 18 to 20 year old bracket at £6.56 per hour, and the 16 to 17 year old category at £4.62 per hour. There's then an apprentice rate of £4.30 per hour. So an individual is entitled to the apprentice rate if they're apprentice aged, which is being under 19 or being 19 or over, but in the first year of their current apprenticeship agreement. If they are 19 or over and have completed the first year of the current apprenticeship, they will be entitled to the minimum wage for their age group. Calculating wages. So it's really important when you calculate someone's wage to consider if there's been any changes in circumstances, such as has it been a birthday, do you have something to deduct from the payslip? There are some parts of a person's pay that do not count towards the national minimum wage. For example, a tip, a premium payment, for example, extra pay for working a bank holiday, a loan from your employer, or a pay advance. There may also be some deductions that could leave a person with less than the national minimum wage or national living wage. So things like the tax and national insurance contribution, paying back in advance or overpayment, pension contributions or trade union fees. Something that nobody likes is a penalty. Employers who pay their workers less than the national minimum wage are required to pay back any arrears. HMRC have also issued fines up to 200% of the arrears. And in recent years, they've decided to publicly name and shame the worst offenders. The Coronavirus Job Retention Scheme. So we'll just touch on this quickly as it is due to end very soon. So it was a temporary scheme open to all UK employers designed to help them with those operations that had been affected by the pandemic. It has proven to be a lifeline to many businesses, and it's supported around 10 million workers in the UK. Employers can currently use the dedicated portal by HMRC to claim for 80% of furlough employees' usual monthly wage costs, up to £2,500 a month, for any hours not worked. Employees can work for any amount of time and any work pattern and claim the grant for the furloughed hours with reference to hours the employee would usually have worked in that period. Calculating a claim. So it's the employer's responsibility for calculating the correct amount to claim from the scheme. HMRC have released a lot of guidance on their website which walks you through the various calculations needed to work out the amounts to claim. The amount you should use when calculating 80% of your employee's wage for hours not worked is made up of the regular payments you are obliged to make. So the regular wages you pay to your employees, any non-discretionary payments for hours worked, including overtime, any non-discretionary fees and commission payments, and any piece rate payments. You shouldn't include any payments made at the discretion of the employer or the client, any tips, any discretionary bonuses, discretionary commission payments, or any non-cash payments. Other things to consider. So the entirety of the grant received to cover an employee's furlough pay must be paid as money to the employee. Where the employer provides benefits to furloughed employees, these benefits should be in addition to the wages that must be paid under the terms of the job retention scheme. If you made an error in your claim that has resulted in you receiving a smaller grant, you must still pay the employee the correct amount. For claims relating to the period after 1st of November 2020, you will only be able to increase the amount of your claim if you amend it within 28 calendar days after the month the claim relates to. Employees that were employed and on the payroll on the 23rd of September 2020 who were made redundant or stopped working for their employer afterwards can be re-employed and claimed for. You must have made a pay-as-you-earn RTI submission to HMRC from the 20th of March 2020 to the 23rd of September 2020, notifying a payment of earnings for those employees. Directors of a company can be furloughed. During this period, the directors should be very careful to avoid anything that could be mistaken for work. When directors are furloughed, they can just do particular duties to fulfil the statutory obligations they owe to their company. They may do so provided they do not do more than what would be judged as reasonably necessary. The coronavirus job retention scheme is a very complex area, and I would recommend that you visit the HMRC DirectGov website for more information or get in touch with us if you have any queries. IR35. So businesses now just have a few months left to prepare for the changes to the off-payroll working rules, which are known as IR35. So from the 6th of April 2021, in most cases, the engager, so the employer, will be responsible for deciding whether to deduct tax and national insurance contributions from freelancers and contractors operating via a personal service company as if they were employees. The new rules do not affect small businesses where they meet 2 or more of these conditions. So the annual turnover is no more than 10.2 million, a total of fixed and current assets over 5.1 million, or they've got no more than 50 employees. When a business grows from a small to a medium or a large-sized company, there is a 2-year transition period before the IR35 regulations fully apply to that business. Engagers are required to undertake this IR35 determination for every contract that they agree with a worker. So the official guidelines are as follows. So pass your determination and the reasons for the determination to the worker and the person or organisation you contract with. Make sure you keep detailed records of your employment status determinations, including the reasons for the determination and the fees paid. Have processes in place to deal with any disagreements that arise. The government have created a useful online tool called CEST, and this can be used to assess your workers if you think a contractor may be a deemed employee, and a report can be printed out, so if you do get challenged by HMRC, you have that print off. If the determination results in a contractor being within the IR35 rules, you will need to deduct tax and national insurance contributions and pay these through PAYE. So here are a few basic steps that all businesses should take to help them prepare for the new IR35 rules. So you should carry out an audit of all employees and contractors currently working within your business to determine who may be affected. So next you should determine who falls under the rules. Last year, many businesses were considering a blanket approach to freelancers, but recent research has suggested that more companies are taking a measured approach to ensure they aren't disadvantaging contractors. So it should be done on a case-by-case basis, as you could face serious repercussions for failing to demonstrate reasonable care to correctly classify such roles for employment tax purposes. If the engager does fail to correctly determine the status, they will be held liable for any tax or national insurance charges, and they could also face a penalty from HMRC. Communicate all the changes. So once you have determined whether a person falls within the rules or not, you should communicate any changes to them. If you determine that a person should be within the new rules, you can easily switch them across to the pay-as-you-earn scheme as required. This could see their take-home pay reduce considerably, and you should take the time to communicate these changes. There is a disagreement procedure which has been created by the government to be used with contractors and the organisation paying the fees in the event that all parties do not agree with the determination. Next, you should create an agreement policy. Businesses should prepare the policy for any new contractors they take on from April 2021, which clearly outlines the employment status. Any existing contractors may also need their agreements adjusted in light of the RI 35 changes. Finally, we should consider the costs involved with IR 35. Many contractors have indicated that they intend to increase their daily or hourly rate to compensate for their tax and national insurance being deducted by employers. You should again discuss this with the contractor as soon as possible so you can factor any additional costs into your employment contracts and budgets. Now we are going to move on to redundancy pay. So unfortunately, redundancy is a growing consideration for many businesses during this difficult time. So you must pay redundancy pay to any employees who have a contract of employment or have worked for you for 2 full years. You must pay at least the statutory amount to your employees, and it does depend on a few factors such as their age, how long they've worked for you, their weekly earnings before tax, and redundancy pay is capped at 20 years. So working backwards from the date of their redundancy notice, you must pay, so it's 1.5 weeks pay for each full year they were 41 or older, plus 1 week's pay for each full year they were 22 or older, but under 41, plus half a week's pay for each full year they were under 22. And the maximum for a week's pay is £538, and the maximum total amount of statutory redundancy pay is £16,140. It is important that you go back and check your employment contracts, as you may need to pay more than the statutory amount. You can also choose to pay higher amounts if you want to encourage voluntary redundancies. As with a few other areas that we've touched on today, if you do need any help with redundancy, please do get in touch with us. Auto-enrolment and re-auto-enrolment. So anyone aged from 22 to the state pension age earning more than £10,000 a year should now have been automatically enrolled into the workplace pension scheme. Anyone who falls under this threshold can still join and receive employers' contributions, but the employer has no obligation to enrol them automatically. Those aged under 22 should automatically join the scheme when they reach that age or start earning above the threshold. So employees can choose to leave the scheme at any time, and any pension built up will stay in their pension pot. Whilst an employee can opt out of the workplace pension scheme, employers still need to initially enrol them into the scheme and re-opt them in regularly. The current minimum auto-enrolment pension rates are 3% by the employer and 5% by the employee. Re-auto-enrolment and the re-declaration must be completed every 3 years. So you must re-enroll staff who left your workplace pension scheme or reduce their contributions back into the scheme and complete a re-declaration of compliance. So the declaration of compliance must be completed within 5 calendar months of the 3rd anniversary of the original staging date. Auto-enrolment and re-auto-enrolment are not optional, and as an employer, you have a duty to offer your employees an appropriate scheme. You could face substantial fines and even imprisonment if you fail to comply. We understand that business owners are facing many challenges when it comes to the payroll function, and we know that this can be very time-consuming and stressful. It could be an option to transfer your payroll function over to an accountant like us. This would save you costs of employment within your firm in hiring an individual that just ran the payroll. You would also have a team of experts on hand to help with the complex areas, such as the ones we have highlighted today. In the last year, we have seen considerable changes to the way employees are paid, which has required businesses to adapt quickly. Whilst many firms choose to go it alone in-house, we at Rotherham Taylor are on hand to provide advice and support with all payroll issues. To ensure you have the support you need to remain compliant and to reduce the stress of managing payroll, why not let us help you? To find out more about our wide range of payroll services, get in touch with our expert team today at Rotherham Taylor.